With the Great Reset coming, we have to be prepared because the world we are going into is not the same as the one that we're leaving. Now, we are witnessing a change of the political system, the banking system, the currency, and even the economy is being completely reset. And while the future is uncertain, from what we can see, it looks like we can expect lots more regulations, lots more rules, restrictions to own and to operate businesses. Now, that would make it harder and more expensive for business to operate, which is going to, of course, make it harder for them to make money. And of course, it will then make it more expensive as a consumer. So in order to prepare and protect ourselves, in order to have more options, we need to keep as much money as we can while we can. So today, I'm going to give you my plan. I'm going to tell you what I'm actually doing. I'm going to give you actual real examples of steps I'm taking, and I'm going to give you the 3 areas that you need to be focused on. So stay tuned. All right, so if you're new to the channel, my name is Mark Moss, and I believe that the future is ours to create. Now, if you want to achieve success in any area of your life, then you need to find someone who's already doing it. You need to find someone who's doing it, and then you need to model the same thing. If you do the same thing, then you should have about the same results. Now, this is why I like to share with you the things that I'm actually doing, the real things that I'm doing in my own life, my business, my investments. And today, I'm going to break down 3 important ways that I'm focusing on money to make sure that my future is set, regardless of what happens in the future, regardless of what happens with this great reset and all this future that they're trying to create for us. All right. Now, if you like this information and you want to help me reach more people, then just take a quick second. Just click that like button right now. If you're not already, hit that subscribe button and the bell notification. This helps the video get out to more people so more people hear this. All right. Now, we're going to break it down into 3 steps, and I'm not trying to copy my good buddy George Gammon. I'm just trying to make it easy to follow. All right, so we're going to talk about the first thing that you need to be doing to focus on money is that we need to be focusing on making as much money as we can while we can. All right. Now, I know a lot of people come into investing. I talk about investing. I have my investing group that I work with. And so I see all the people coming in and they want to know, the best stocks to buy, right? The best assets they can buy so they could, quit their job, so they could become a full-time investor. But this isn't really how it works. I hate to tell you that. It's not exactly how it works. Now, investing in the stock markets, they're more for growing money. They're more for protecting money. They're not really for making it. So first thing you need to do to focus on making more money and is that I would say focus on a business. That's the best way to do it because a business has goods, it has products, it has services. It generates cash flow. Now, you can either start one yourself, right? Or you can invest in a startup. You could even buy a publicly traded business, I suppose, as well. Now, starting one yourself is hard. It's time consuming, it's expensive, it's risky, but even with all of that, I still recommend it, all right? Now, it's been my path to building most of my wealth throughout most of my career. Now, I do it, but it's not for everyone. If you want to start a business, but you don't know what it should be, just remember that we get paid for the value that we provide. So what you need to do is figure out how you can provide the most amount of value to the most amount of people. And just ask yourself a couple questions. So who are my people? Who do I want to be around? Who do I want to serve? And then the next question is, what is their problem? What is their problem that I can help them with? What is their problem that I can solve? Now today, you don't need a lot of money. You don't need a lot of money to start a business. Anyone with one of these, a smartphone, can basically do this right now and today. Okay, now the second option, which I also do, is I invest into early round startups. Now this can be easier and it can be harder at the same time. It can be easier because you don't have to do any of the hard work. You don't have to come up with the idea. You don't have to take all the risk. You don't have to do all that. But it's harder because you have to find the right deals. So this is where I spend most of my time. I spend most of my time finding these types of deals like this. And I like to invest into other people's businesses. I like to leverage their ideas, leverage their expertise. Now, early round startups, they provide the most risk, but they also provide the most upside, the most return, like venture capitalists do. And so just like a venture capitalist, you need to have a little bit of experience. And so I want to give you an example. I'm going to give you an example of an actual deal that I just recently did. And then I'm going to give you some ideas of how you can do the same thing. And I'm even going to tell you how you can go find these types of deals on your own. All right, that's at the end. So in December, so just last month, I was offered an early round entry into a new startup company. And I get offered these deals because I've been in this space for a long time and I've built up my network. And again, I'm going to tell you how to get these deals at the end. But I was offered this deal to get in this early round startup. It was a company called PlantX. And they just launched in 2020, February of 2020. And they offer a plant-based they offer plant-based consumers the option to get healthy by having meals that are designed by chefs delivered directly to their home at competitive prices. So it's like a meal delivery company. They went public in August of 2020, and they're currently an over-the-counter stock. And they're under the symbol VEGA, VEGA, that's in Canada, or PLTXF, and that's in the United States. Because they're over-counter the stock, they have two different ticker symbols. Now they're in the meal delivery space, which I mentioned earlier, and that space is rapidly growing. As a matter of fact, it's expected to grow by over 300% in just the next couple of years. And they're also in a new category of that space where they're delivering all plant-based foods, which is another fast-growing sub-niche where we've seen plant-based foods specifically increase by more than 100% in just 2020 alone. Now, when I'm investing into any business, especially a new startup business, one of the most important things that I do is always look for a company that I have some domain expertise in, something that I know something about. I have a little bit of an edge. And this company right here checks boxes for me. It might not for you, but for me, I personally focus on health. I've focused on health. I've focused on diet seriously for like over 2 decades at this point. I've tried all the different options that are available. I've tried the different diets, the different supplements, the different trends, and even more than that, I was an advisor to another meal delivery company at one point, and it focused on intermittent fasting. So it was a meal delivery space, and it was specifically a trend diet delivery space. So I know a couple things about the space, and I also know that the space can be very competitive. So one of the things that I always look for in any company that I invest into is the people. All right. Now, when I've broken down gold mining stocks and gold mining companies for you in the past, I've mentioned this before, it's always about the team. I like to say that a good team won't go to a bad project. And so by finding a good team, it weeds out a lot of the work that I have to do, and at least in the beginning, all right? And so this company, PlantX's team, they have a founder, Sean Dollinger, and he already had one of the largest delivery companies in Canada, which is where they're based. He's also launched and assisted 4 other public companies, with many of them going into double-digit returns in just a short period of time. The CEO, Julia Park, has also been successful in more mainstream businesses, including BMW, Daimler in Germany, and she has a lot of experience to scale and to grow these types of companies. As an early round investor, that's what I'm looking for. I want to make sure that the team has the ability to get that company going, and I want to make sure that there's that asymmetric opportunity, which means that we have more upside than we have downside. There's more reward than there is potential risk, and this definitely checks that box because we're so early. Now, there is big upside because we're early and because the entry price is low, but we have to deal with that, all right? I'm going to tell you how we manage the risk. Now, what I like about these types of asymmetric opportunities that I can get into with companies like this is because of something like Paul Tudor Jones talks about. Now, Paul Tudor Jones is one of the most famous billionaire hedge fund managers, and he has a 5-to-1 rule. And so basically what that is that he won't invest $1 unless he expects to get $5 back out of it. That allows him to make some mistakes. He could actually be wrong on 4 out of 5 and still make profit. Now, on this particular deal, it definitely checks that box as well. As a matter of fact, I think it has a 10-to-1 opportunity. And so it gives me even more flexibility depending on what happens. All right, now comes the next part of investing in these types of deals. Now, just because I think the stock can be worth $10 in the future, it's still a risk, right? There's always a risk. There's always different types of risks. So I don't want to go all in. Not yet anyway. So what I do is just like a venture capitalist would, instead of going all in when they go into a position, they go in trenches. So what this means is that I invested only half of my desired allocation on the first round price that I got. And then I secured an equal amount of warrants that I can use or I can exercise in the future, which basically means that I have the option to buy more shares at a predetermined price, but I have no obligation to do that. Now, the reason I do this is because even though my warrants are going to cost me more money in the future, and I could potentially make more money if I would have just gone all in the beginning, my full allocation, the reason I do this is because it lowers my risk. If you notice, there's a trend. I keep talking about risk because investing isn't all about the upside. It's about protecting the downside. That's the most important piece. Warren Buffett says the number 1 rule for investing is to never lose money. The number 2 rule of investing is to never forget rule number 1. And so we're always trying to manage our risk, hoping for the best, but planning for the worst. Now, to show you more about how these warrants work, I don't want to give you my exact numbers, but let's just say that they gave me warrants at, let's call it $2, all right? And then I think that, like I said, the stock could go to $10. So what I can do is I can just sit back and I can wait. and I can wait for the stock to move. And then if the price of the stock does get up to 10 bucks, then I can exercise my warrants, which is basically meaning I can buy it for 2, I can sell it for 10, and I'm making $8 in profit. Now, this is just an example but I just want to explain how warrants work, but it gets even better than that. So let's jump into step number 2 to explain that. All right, so step number 1 was making more money. Step number 2 is keeping more money. Now, this is super important. Like I said, we need to make as much and keep as much as we can right now because of what the future looks like. And so we want to keep more while we can and keep it growing and hang on to it. And the best way that we can do that is to lower our expenses. Now, they say, a penny saved is a penny earned. And so if we can lower our expenses, it's basically like making more money. We want to stack as much as we can while we can. And of course, what is your biggest expense? It's taxes. So now for me personally, this is a little bit hardcore, but for me personally, I moved from California to Puerto Rico this year to lower my cost of living, yes, also to lower my taxes. Taxes are my single biggest expense. And so I did a whole video on it. I'm not going to go into all the details about that. If you want to watch the video, I'll link to it right here. But I'm serious about it. I'm showing you that I'm not just talking about these things. These are the things, these are the actions that I'm actually taking right now. Now, since I've been here, actually I've been here just not even 2 weeks yet, but since I've been here for the last couple of days, on January 11th, PlantX applied to uplist their stocks to the NASDAQ. So they're currently an OTC stock. They're uplisting to the NASDAQ. Now, when they get on the NASDAQ, it's going to provide even more access to the US markets. It's going to help the company accelerate its institutional and retail investor base, and it should really act as a catalyst to push the price of the stock even higher, which is great news because all that gain is happening while I'm here in Puerto Rico. Now, when that happens, I can then exercise my warrants from Puerto Rico, and I'm going to get all the growth and I'm going to get all the capital gains I receive, but they're going to be taxed in my Puerto Rico tax rate instead of my California. So I'll be paying 0% tax instead of the whatever 50, 60% tax that I'd be paying on that if I was still in California. So now my cost of living is down. My taxes have gone from 60% to about 4%. And even better, all my investments, which are taxed as capital gains, are now taxed at 0%. So now I can make more money, I can keep more money, and this brings us to the final stage on how we survive this great reset, this economy reset that's happening. And so step number 3 is we've made more money, we've kept more money, and now we want to put it into places that can hold their purchasing power. All right. Now, what does that mean? Now, a lot of times people get caught up in thinking about prices in US dollars. Gold is priced at $1,800, $1,900. What if gold goes to $1,200? What about real estate if it goes up in US dollars? Stocks, everything's in US dollars. But we need to think, instead of US dollars, we need to be thinking about things in terms of purchasing power. Because it's not that things are getting more and more value in US dollars, it's that the US dollar value is dropping, and so that it takes more dollars to buy those things. And so we've made more money, we've kept more money, and now we need to put it into assets that will hold, will retain its purchasing power. Of course, I talk about these all the time, so I'm not going to go super deep into this, but those are real, hard, tangible assets. That can be real estate, it can be land, of course, gold and silver, other types of commodities, other types of metals, Bitcoin, etc. We want to go into those types of assets to preserve our purchasing power. Now, finally, I'm just going to talk about real quickly how to navigate these types of deals. Now, you might go, hey, Mark, that's great. Thanks for breaking that down for me, but how can I do that, right? You have access to these deals, but how can I do it? How can you find them? Now, in the past, these types of deals, like pre-IPO deals, have been limited to just accredited investors. Now, accredited investors isn't for everybody. You have to make a certain amount of income. You have to have a certain amount of assets. And so typically only accredited investors, private equity firms, hedge funds, and stuff like that were able to do deals like this. But in 2012, there was a Jobs Act that was passed, and it basically made it way easier for these types of companies to raise money. And they can raise money by bringing in people who are not accredited. That might be you. So how do you find them? Well, the first thing you want to do is you want to start to build out a network. That's what I have. So these deals start coming to me. Now, if you're just starting, how do you build out that network? Well, start talking to stockbrokers, start talking to financial advisors. You can also monitor the news for new companies. And then when you see them, go there and message them. Usually they have a tab for like investors or contact, and you can just message them directly. All right. Another way you can do it is there's several new online companies or platforms that crowdsource this and allow you to invest into these pre-IPO deals with the crowdsourcing. Now, I haven't done a lot of due diligence on these platforms, so I'm not going to review them for you right now. But a little bit of time on Google or whatever your favorite search engine is, and you'll be able to find lots of these different companies. There's even another way where you can take these companies that go into a pre-IPO, and as soon as they hit the market, there's ETFs that buy up these pre-IPO companies. And so a lot of times what happens, they hit the market right away, and a lot of people take money off the table, which causes a little bit of a downward pressure on the price. You can buy in at that point and then ride it back up. And so there's a couple ETFs that you can buy with literally one click in your brokerage account, and you can get full exposure to this pre-IPO market. Now, you may think that, shoot, well, what if I buy it after they've already been pushed up? That's a risk that you have to be willing to pay, but there's also less risk because they've made it that far to be a publicly traded company. And so again, we're not always trying to maximize for the total upside. We're also trying to maximize for the downside, and that definitely does it for you. All right, so that is my plan. That's my playbook. That is an actual company that I just invested into in December. I told you how I did it. Now you can model my success. Make more money, keep more money, lower your expenses, lower your taxes, and go find those deals. Let me know what you think. Leave me a comment down below. Let me know, is this something that you're interested in? Do you want me to do more content on it? Let me know in the comments. Of course, as always, give me a thumbs up on this video if you like it. If you don't like the video, I don't know why, but give me a thumbs down. I don't care either way. I just want to hear from you. Leave me a comment and let me know. I try to answer as many of these comments as I can, as quickly as I can. And that's what I got for you today. All right, to your success. I'm out.